Welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic and geostrategic analysis on the world's #2 economy. My name is Tony. Let's jump in.
Okay, happy Sunday everybody. First up, my apologies about my voice. It appears that I'm recovering from a very mild case of COVID. This is why there was no video yesterday, which we're making up with today's video. There is just so much to cover from this week that we do need to get this episode out. So again, please forgive my voice. Hopefully it should be back to normal in the coming days. The world is watching Russia this weekend with mixed emotions and a lot of uncertainty. Beijing is no exception to this. State media is cautiously covering the updates from a strong pro-Putin position, and of course with anti-NATO and anti-US sentiments. Policymakers and leaders in Beijing will be following the developments closely, and we will be examining their official response as well as unpacking the implications of these Russian events for China generally and Russo-Chinese relations specifically in the coming days. For now, however, this is a China-focused channel, not a Russia-focused channel. So we return to the less exciting and less sexy, but still critically important China developments from the last few days. It's the weekend, so as we usually do, it will be a foreign policy heavy episode, and today we examine salient developments related to EU-China relations which these Russia developments will no doubt have an impact on themselves. This week, Premier Qiang made an official trip to Europe, his first overseas trip as premier, which shows how important the EU means for Beijing. Indeed, more than one commentator has described the US and EU strongly uniting in one anti-China coalition as a geopolitical nightmare for Xi Jinping. Thus, it is a foreign policy priority for Beijing to avoid any such coalition from forming. We've already covered the German leg of Li's trip in great detail from earlier this week. Now let's look at the French leg. On Thursday, Li was in Paris, where he expressed to a French audience that his country, quote, is ready to work with France to advance balanced development of bilateral trade, expand two-way market access, and optimize the business environment for bilateral practical cooperation. End quote. Chinese analysts had hoped for a productive visit in Paris, based on the consensus reached by Xi Jinping and Emmanuel Macron following the latter's visit to China back in April. We remember Macron's calls for greater strategic autonomy for Europeans caused some controversy at the time. Indeed, on Thursday, Premier Li leaned into this sentiment, expressing, quote, China always regards EU as an important pole in a multipolar world. Strengthening cooperation between China and Europe is a strategic choice based on each other's respective interests. And the China-Europe relationship is not targeted at any third party, nor is it subjugated to or controlled by any third party. End quote. While France is a proud civilization and strong middle power, Macron's more conciliatory tone towards Beijing likely also comes with expectations that China will assist in bringing an end to the war in Ukraine. The Chinese side also dangled economic carrots in front of their Gallic hosts. On Thursday, the two sides signed multiple cooperation agreements in aviation, space research, and nuclear energy. The powerful National Development and Reform Commission, China's top economic planner, signed a letter of intent with Airbus to facilitate the construction of Airbus's new final assembly line in the northern Chinese port city of Tianjin, about an hour or so from the capital. Li also met with French President Macron, with the French foreign minister explaining that the two, quote, discussed topics including Ukraine and Taiwan, end quote, without giving further details. She also added that Macron could consider attending the BRICS summit if he was invited. Li's final day was Friday, where he attended the so-called Summit for a New Global Financing Pact. In his closing remarks, Li once again pushed hard the idea that Europeans must not de-risk or decouple from China, saying, quote, China will unequivocally reject trade protectionism and all forms of decoupling and severing of supply chains, end quote. Also aware of growing international criticism, especially from some Europeans, towards Beijing's handling of sovereign debt issues with developing nations, Li added, quote, China is ready to be engaged in debt relief efforts in an effective, realistic and comprehensive manner, in keeping with the principle of fair burden sharing. End quote. As we've discussed in previous videos, French protectionism, especially towards the EV sector, could introduce yet another new destabilizing element to Beijing's EU strategy. Currently, this rising protectionist sentiment remains in a state of tug-of-war between the Germans and the French. Quote, the French car makers can say what others are thinking due to their minimal Chinese market exposure. The Germans have their mouths taped as they are petrified of a retaliation from their cash cow market, where they are heavily, or now even potentially dangerously, exposed. End quote. State media has hailed Li Qiang's trip to Europe as a great success. However, analysts warn that China's Europe policy, which itself has at best only seen mixed results, still has a long and bumpy road ahead, and success is not guaranteed. Quote, while Xi hasn't written off hopes of steadying ties with the US, Europe appears to offer more fertile ground. Despite growing hawkishness, major European countries, including Germany and France, still do not view China as an existential security threat. Most importantly, they have little interest in being dragged into a US-China Cold War, let alone a hot war over Taiwan. But persuading Europe to remain neutral, as Xi himself has implicitly urged, will not come cheap. Friendly rhetoric from officials such as Li and some sweetheart deals for European companies are not likely to suffice. Serious economic disputes divide China and Europe, which has long complained about restricted access to the Chinese market, Beijing's generous subsidies to its firms, and the country's poor record on intellectual property protection. Indeed, we remember covering many of these points in the most recent EU business survey from earlier in the week. We continue with Pei's observations. Another issue Europe feels strongly about is China's poor human rights record. Above all, European nations deeply resent China hiding behind a facade of neutrality while continuing to support Russia's Vladimir Putin. Europe is unlikely to radically toughen its China policy in the short term. However, over the long run, the price of Europe's strategic neutrality will likely be higher than China thinks, and probably more than Xi is willing to pay. End quote. We are certainly living in interesting times. The situation in the East and South China Sea continues to intensify. Washington and Beijing move closer to a new Cold War. The EU debates whether to join and deals with the energy earthquake unleashed by Russia, as of course Moscow's war in Ukraine continues to rage on. Central banks understand the risks of uncertainty. We remember in May, the People's Bank of China increased its gold reserves for a 7th straight month. According to the World Gold Council, a quarter of central banks intend to increase their holdings over the next 12 months amid increasing pessimism toward the future role of the US dollar. The trends are clear, and as we have discussed before, at uncertain and unstable times like this, it is gold that the smart money turns to. And that is exactly the reason why today's video sponsor, Gold Mining Inc., is an incredible opportunity for any savvy investor looking to take advantage of these historic times we find ourselves in. Gold Mining Inc., which is trading on the New York Stock Exchange, is a public mineral exploration company focused on the acquisition and development of gold assets. Through its disciplined acquisition strategy, Gold Mining now controls a diversified portfolio of resource-stage gold and gold-copper projects in Canada, the United States of America, Brazil, and other locations across the Americas. Gold Mining Inc. boasts a unique combination of sizable resources and balance sheet strength. The company boasts an impressive management team too, with their co-chairman, the ex-CEO of the world's largest gold company, and each major leader with decades of experience in the industry under their belt. But what really stands out about Gold Mining Inc. from an investment perspective is undervaluation. Massive undervaluation. Currently, Gold Mining Inc. has a market cap of just $155 million, even though they have combined stock ownership positions worth $148 million. In addition to this, Gold Mining Inc. owns a total of 13 gold projects with a combined amount of 22 million ounces of gold reserves, meaning it's in the ground, it has been discovered, but it has not yet been mined. These resources, if realized, have the potential to be worth up to $660 million based on international industry standards, but are currently only being valued by the market at $7 million. Therefore, analysts argue this company is, at the very least, somewhat undervalued, and at best, extremely undervalued, and could be worth as much as 5 times more, or a 400% upside from its current market cap. Indeed, more than one analyst has given Gold Mining Inc. a price target of over $5, even though it's currently trading for just 90 cents. As such, Gold Mining Inc. is an exceptional opportunity and could make an excellent addition to any well-diversified portfolio. So, if you're looking to take advantage of this opportunity, check out Gold Mining Inc. on the New York Stock Exchange. We remember that all investment involves risk. This is not individual investment advice. Always speak to an investment professional before making any investment decision. A big thank you to Gold Mining Inc. for sponsoring this episode of China Update. Okay, we now move back into regular coverage. Of course, Qiang is in Europe as the continent continues to debate just what its China policy should be, and to what extent it should follow the US's lead in decoupling, or de-risking, as EU and US officials now call it. This week, the EU published the bloc's first economic security strategy, intended to, quote, restrict autocratic governments' access to European technologies, such as quantum computing, artificial intelligence, and advanced semiconductors, end quote. The plan, creatively titled European Economic Security Strategy, explains, quote, with geopolitical tensions rising and global economic integration deeper than ever before, certain economic flows and activities can present a risk to our security, end quote. With the release of the plan, the European Commissioner for Competition explained that the strategy is obviously directed at nations like Russia and China, but stressed, in relation to the latter, that restrictions would only be placed on advanced technologies with military applications, and that, quote, the vast majority of trade and economic relations with China is business as usual, end quote. The plan proposes to strengthen the EU's control through 3 areas: a review of its inbound investment screening, more cooperation on export controls, and outbound investment screening. The document explains that companies may be putting European intellectual property and national security at risk by outsourcing too much of their supply chains to countries such as China, and that the, quote, unchecked globalization of supply chains, end quote, must be better regulated. The problem is, these decisions have normally been made by European capitals themselves, and it may be difficult for Brussels to convince national governments to hand this authority over. Quote, there is a general reluctance among EU capitals to go too far. Caution and prudence is the word from the member states. Let's not jump ahead of ourselves when it comes to proposing new instruments like outbound investment screening, end quote. EU heads of government and state are expected to discuss the proposals at their June 29th through 30th summit. Chinese state media, unsurprisingly, is unhappy with the new plan, publishing several English-language articles this week, carrying familiar themes which we on China Update have seen before. As we look at one example, we observe that these commentaries risk sounding very patronizing to the Europeans they are seeking to convince. Quote, the EU should not allow the US to mislead it into pursuing de-risking. The EU's policy toward China as a partner, competitor and rival is contradictory. It shows the bloc has not devised a clear strategy toward China and lacks strategic vision, end quote. We note that de-risking was actually first coined by EU Commission President von der Leyen and was later adopted by US officials in place of decoupling, not the other way around. The US is now engaged in a deep and long-term strategic competition with China, hurtling towards a new Cold War, and some war risking a hot one. The debate in Europe regarding whether to join the US in these efforts, and if so, to what degree, rages on. And we will continue to follow that debate and China's efforts to form it here on China Update. And as always, I hope you will all continue to join me here on the ride. Okay, that is today's episode of China Update. Thank you so much everybody for watching. Once again, my apologies for my voice. Hopefully it will be better in a few days. Have a wonderful Sunday wherever you are, and I will see you all tomorrow.